sweetheart giant chilies. You have to eat them yellow, green, purple, red, but there should be marked on the box, like to tell you. That's where you eat it there. Hey, welcome to the Closing Beat, everybody. Happy, oh boy, Wednesday. Oh boy, here we go. Welcome to our stock market show that we do every day about the stock market. That's what we talk about. We're financial advisors here. We do things a little differently. So behind us, that's real. It's not a green screen or anything. That's our office. We actually make it a TV studio so we can teach customers and make it more of a fun, less intimidating environment than other advisors do. And on this show here, we'll cover the stock market. We'll go all kinds of good stuff here for you. Very data-driven. We got a lot of cool things actually coming out. But there'll be no show on Friday. So tomorrow will be the last day for that one. We do have some great FinTips videos. You can see the thumbnails in the bottom right-hand corner of your page. Monday was Intro to Gap Accounts, talking about how much to put into those Gap accounts and how to quantify the amount that you got to do using a case study. Wednesday, today, we did average stock market returns. They're not actually average. So we went through the data on that one. And then on Friday, we'll review a study that FINRA did about people opening brokerage accounts. Who are they? Where were they? What'd they do? If you want to join a research site, we're not taking customers right now, but on our research site, you can join that. $13 a month if you want to join. And we just cover interesting things, data points, lots of cool tools coming your way for that, to help you drive ideas of different investments that you may have or be considering, and just kind of see generally a very simple way to analyze things. Cody just did a recent Super Bowl post on there, just a fun post. It was kind of cool to check that out if you'd like. And then tomorrow night, Thursday, Wine and Wealth, we're going to be doing a class for our customers. We're going to be going over how to analyze the stock market, and we've developed one cool little tool for you. I'm going to tease it, show it right there, and then take it away because it's not quite ready yet. But we're going to go over that, show you how I come up with all this data. How do we track everything? Actually, just put everything in my head onto a sheet, so we'll show you how that is all done there. Let's go over to the stock market here today because we got some stuff to cover. You want to take a look? I'm going to start with the Dow. So the market's basically just held up at highs today. There wasn't anything really exciting there. We're looking for that catalyst. Is it going to be stimulus or a confirmation of some stimulus amount? What's going to happen there to get people excited to continue to buy the stock market as much as they have been there? The Dow is up over 3% pretty comfortably here year to date so far. That's largely thanks today due to United Healthcare recovering. That is the largest weighted stock. It's the highest price stock. That's why. So that one was the driver, and Goldman Sachs was one of the other drivers there. Financials continuing their rally back to highs, almost perfectly hitting those highs there. As far as gainers in the Dow, you got Walgreens, Boots Alliance kicking butt over there, continues to move higher. And Cisco was your drag today. Cisco was earnings based. Today, it was after hours yesterday, but lost about 2% today, and so that is the weakness there. If you look over at the Russell, we broke a 7-day win streak, actually. We were trying to get 8 straight days in a row of gains, and it ends at 7. It was pretty even selling today. Healthcare was one of the weaker areas inside of the Russell 2000. Also, the growth stocks. If you were looking a little bit deeper, you would find growth stocks were kind of weak. And help drive things back. Novavax pulling back a little bit. That was your biggest drag today. You had Mesa Airlines on earnings, big mover there. That was I believe your biggest gainer in the Russell 2000 today. Mesa Airlines with earnings, and I believe they did pretty good. Cody's favorite stock, RCI Hospitality, added 22% on the day. Earnings were strong. They got about $38 million in revenue, which was more than expected. It's still down, but $38 million in revenue, down from $46 million last year. Bottom line is more strip clubs are opening back up. Everybody's excited about that. Cody? Yeah. Right? That's your jam, man. If you don't know, Rick, ticker symbol Rick, it's adult entertainment. I mean, you aspire to have a public company, doesn't matter what you do, apparently. S&P 500 is up about 4.5% year to date. Looking good, just sitting there quietly at highs. NVIDIA was one of your better contributors today. That's that new breakout, right? It's trying to move to new highs and looking good. Twitter's going to be in the news earnings-wise, if you're taking a look at that one there. And notice what happened. It gapped up today, and the day trader said, sell it lower. That's that already up, gaps higher. You play that trade to the downside there when things like that happen. These were your biggest contributors on the day. One of the bigger gainers today was Under Armour, about 7% on the day. That's going to be earnings related, and Tesla was your biggest drag, finally moving or pulling back a little bit for those of you that have been dying to get yourself some Tesla, down 5.25% on the day there. one interesting thing is happening here. We're going to take a look at this real quick. If you look at the stock market, you look at it as a whole here. This is the call volume, right? It's tracked. We're just seeing how many people are buying calls out there using options to buy calls. Notice that over here on January 27th, the call volume actually peaked on the same day that GameStop hit its high. Wonder if that had anything to do with it. Sure did. So you've actually got call volume starting to retreat back into a normal area there. Just give you an idea of the bullish positions being put on. If you look at the put volume, those that are buying and selling puts, right? Basically about average, not a whole lot of action going on there, not much to tell you. If you look at the S&P 500, call volume on the S&P 500 is interestingly at lows, right? We could zoom out even further, but basically you're just seeing down at the low end of the range there, not a lot of bullish positions being put on the call S&P right now. And if you look at put volumes, they're also trading about average, so not a whole lot in terms of people wanting to take that hedge position or believe that the markets are moving lower or whatever it may be. You actually have a lot of people just choosing to go to cash because where else are you going to go? There's not much else to do there. And so not a lot of option trading going on out there. If we go to the sector breakdown here for the day and take a look over at the different sectors, you got energy leads the way. That's 8 straight days of gains in oil. Take a look at the price of oil. Up just barely today, but still 8 straight days in a row with the price of oil. That makes every single energy stock higher on the day. Take a look at all the performance inside of this one here. Really, really good. Occidental Petroleum, which we happen to own, and Diamondback Energy, we also happen to own in our portfolios here. They're nearing 50% gains just for the year. That's how impressive this rally's been, and energy as a sector is almost back to new highs for the year. We take a look over here. You got tech stocks today. Not much. Just kind of a quiet day overall for tech stocks, and the tech sector continues to be a trader's market. They call it a trader's market because the sector as a whole is not really exciting, but there's a lot of stocks inside of there that are quite exciting. If you take a look today, here's a quick list. NVIDIA's that recent breakout that we just talked about there, and a couple others that lead into the semiconductor space. We want to go down here and look at something like Xilinx, right? So if you look at Xilinx, that's obviously the bigger bubble, and look at the rest of them there. They're all helping you out a little bit. A couple weak ones down that have been otherwise extended, but looking pretty good tech-wise, just if you're specific. Don't think the tech sector as a whole is the fun place to be right now. Communication services still up on the day. Oh no, here we go. Still up on the day. Nice little move. We're sitting at highs there. Today it's going to be a lot due because of Twitter. If we look at the bigger contributors today, Twitter was your biggest contributor overall with that earnings gap that we saw today. The sector as a whole is not being led by Facebook. Look at this guy here. Facebook is about 20% of the entire sector, communication services sector. And if we look just like year to date here so far, it's not really participating, right? So far this year, it has contributed no positive points to the communication services sector. It's kind of interesting. Everything's been Google or Activision, Netflix, and Disney. Speaking of Disney, we take a look at Disney over the last 5 days. One of the better performers here, up 7% in the last 5 days. That's not going to make it the best performing stock, but that's an interesting move. And I thought, that seems a little bit rare there. So what we're going to do is go over here, use one of our cool tools that we're building out for you guys. We're going to look at the rolling 5-day search of Disney. We're going to say, how often does it gain 7% or more in a 5-day period? Right? That's all we're curious about. We'll look back 30 years because there's enough data there for us. And this might take a second to run, but let's just see. Is 7% in 5 days odd, or is that something we could get excited about? And what we did is we added some new forward stats here for you off to the right. You can see that, in fact, Disney has gone up 7% in a rolling 5-day period 94 times. Here are those 94 times to show you just about what they did, 7%, 8%, 10%. You get the drift there. And then what we did is say, well, I don't want to look through all this, right, to see what happened over the next 5 days. I actually want to just, can we just get the data? So looking forward, since we set it to 5 days, it's going to say the next 5 days averages a slight decline, right? Slight decline, 0.32% to the downside. In other words, 7% is exciting. It tends to relax a little bit, take a break. Median loss is 0.27%, and it's basically a coin flip in terms of being positive That's largely because of the small gain over the average gain. And so that's where Disney stands. It's not technically rare. 94 times is pretty good. But when it does things like that, it tends to get a little weaker. So just for fun, let's say Disney continues higher and gains 10% over the next, what would be the 5-day rolling period. Now the performance gets a little worse. So what this tells you is if you see Disney move higher and gets towards those double-digit returns, has a couple percent gain, tomorrow and so on Friday, then you know, all right, now Disney doesn't like to be up that far. The average return is a pullback of 1.2%. Median return is a pullback of about 1%, and it's often not positive there, 41.46% of the time being positive. So what can we learn from that? It's actually quite simple, right? 7% is interesting, but not odd. Doesn't mean you may take any profits here, but you want to have your eye on Disney, because if it happens to get going a little further, you know that statistically a pullback is working its way through the system there, if that's something you're interested in. Also, if you're ever in Magic Kingdom, I just throw a little stat out there. I was thinking about this today. If you're ever in Magic Kingdom, it used to be where they keep the strollers. There's something called Tony's Cafe from Lady and the Tramp. You go right up to Tony's Cafe, or Tony's Restaurant. Go look down on the ground. There's like a faded little imprint of 2 paws inside of a heart. That's Lady and the Tramp, man. It's a hidden little thing inside of Disney. There's lots of hidden things in Disney. Was that good? I know I haven't shared that one, right? You haven't shared that one. Yeah. All right. Cool. I thought of another one too, but we'll have to save it for another day. It'll be an interesting secret that's more creative, we'll say. Anyways, let's go to new highs, new lows. You got 48 new highs, and here's the deal with this list. The new highs are starting to get extended. So you see a lot of these stocks on the list. You go, okay, cool, momentum. I see it. Everything's going well. But they're all extended. So you might want to look at the new highs list now for pullback opportunities if some of these stocks start to pull back. So, for example, you got Dr. Horton inside of here. That's performing well. All looks good. If it pulls back, you would perceive that to be a buyable pullback, but it's not something you may want to chase right now. Fortinet, same thing. Maybe the last, 2 or 3% we've missed out on, and it seems like with that topping tail today, seems like it wants to pull back. If it does, so long as it's not an aggressive slam down, then you would say, okay, we're in an uptrend. We broke to new highs. A pullback should be a buyable pullback inside of an uptrend, and that would likely get people excited there. Expeditors, same thing. You had a pretty interesting rally to get you to new highs. I would say that spent a lot of energy to get itself up to these new 95 area. You would think people would get excited about that. Those that missed the breakout that want to participate. Texas Instruments is one it's kind of basing in here. So this is not one for a pullback. You're looking for a breakout, right? So it's got a tight little base in here. It's getting tighter and tighter in the middle of an uptrend. So that's obviously bullish. It gets a bullish head start, if you want to say it that way. And so looking for a breakout on Texas Instruments. And what did we just notice a minute ago? In the tech sector, semiconductors showing a little life. What is Texas Instruments? It's a semiconductor. And then we talked about this one the other day. Willis Towers here broke out, kind of got away from you. If you just happened to catch it, oh man, I missed the play. Got to let it pull back a little bit. Anything back towards 220, people would probably be interested in buying that one. I can't tell you what to do, but I'm just pointing out things that are interesting. And with that, I'll move on to stocks in the news. And we'll take your questions. If you have any questions or anything, we'll see what we can do there. Okay, so we got Twitter in the news. That's going to be earnings. We had that gap up reversal that we talk about all the time. They said monetizable users were down 1%, but they made 4% more revenue per user. And they said, don't worry about it. The fact that we banned Trump, we don't think that's going to hurt us. We're not even worried about that. How do you feel about that, Cody? Is that a little frustrating? No comment. All right, user growth. Also, they said could slow down a little bit this year. Investors did not care. They said, that's fine, Twitter. Do whatever you got to do. Just keep gaining for us there. Lyft up 5% on the day. Riders down. Also, Uber reported after hours, I believe. Riders down 5%, but the revenue per rider was up. People, obviously something to celebrate there if you're an investor in Lyft. Riders overall down 45% year over year. Cash on hand down 50%. I didn't like that one, but apparently I would have been wrong because everybody's still buying that stock. Yelp down 4% on the day. They had earnings. They said this year we should return to sustainable growth. Well, that's their goal anyways. And so that's basically it. Yeah, I mean, that's pretty much, there's not a whole lot to go on there. You got Wynn Resorts, 2.7%. Wynn Bet. Is this going to be, no, Cody, is this going to be like streaming where all these sports betting apps. There's like 1 billion of them, and like all the streaming services, and then you got to choose your favorite and everything. I didn't even know about WinBet.
Everybody's got one now.
Everybody's got one. Okay. Well, WinBet got their initial approval in Tennessee. I don't know if that's good or not, but the stock was a little bit higher on the day, so good for them. If you happen to own it, that's awesome. The stock that we do own here is CDW. Awesome to see that at new highs. Typically a pretty boring stock, I'll admit. It's one that you look at, doesn't normally come up on the radar. Up 4% today, continuing with a very nice and happy rally there. They beat on earnings by 34%. Revenues came in better than expected, and we get a dividend raise of 2 cents. So we're at $1.84 now, I believe, is where we'll land on that one. They just raised their dividend late last year, and so that's going to continue going forward. I like to see that. You got growth and a little extra dividend. Come on now. I love it. Yep. What do we think about AllState? So AllState, let's go over here. There you go. So you had a nice little rally, moved above highs, and then faded away. So at some point we talked about this breaking above these highs. It was an okay little move, real slow, not exciting. Now starting to fade back. I would think that's buyable myself. I would be in no hurry and be kind of sort of picking on it to say, like, give me $100 a share. Can we get closer to $100 a share? I'd be excited about that. But we will see what happens. Yep. What else do we have here? I love it. Oh boy, I started something. See what I started. Sorry. Hey, we're not in politics season. What happened? There was a fire there for a while. All you guys were talking politics, and I just did my thing, and now it's all quiet. So I throw a politics thing out there every once in a while. I like it. Dr. Horton says, looking at Sonos. All right. So we're looking over here. Got a stock sitting at highs there. Looks like it broke out of channel, stuck in since December. We may not be looking at the same stock if we're looking at SONO. I don't think we're looking at the same stock. I got earnings out. So maybe there's something, maybe I'm missing something. Yeah, we'll see. I like GM a lot, actually. So we'll share this tomorrow in our Wine and Wealth class. But if you look at the automobile sector, that's where the money's at right now. I like what GM's trying to do. I kind of think they need a face to this. You know, like Tesla's got a face. I know GM doesn't want to do that, but they need that face, someone to rally around. You know, can you, if anybody from GM that's leading their EV products and stuff, if they walk by you in 7-Eleven or something, would you know? I mean, like they need a face. I think that's the key for a lot of these people. I pitched that to Chipotle. When Chipotle switched CEOs, I actually applied to be the CEO. And I said, well, I'll be the face. You know what I mean? Like somebody to go out there and be like, oh, yeah, burritos are good. You know, that's what they need. Yeah. The dojo was not loading client portfolios today, Charlie. Are you doing some... oh, he's fixing it right now.
I just saw an error come in.
Oh, he just saw it. Okay, he's watching. So the error just came in. That's being fixed right now. I like it. Thoughts on QCOM rebounding soon? Remember, it's the same idea here. You've got that same, maybe a little bit of money moving back into this space, and we were just kind of showing that. So with QCOM, it's the same thing. In the short term, though, think of this one as looking for people to give up, right? So right now, people are going, oh no, that earnings scare me a little bit, but that's okay. I got a big profit. I'll hang on to it. If it starts breaking below 140 right in here, all this area, everyone's going to assume the next stop is 130. You might see people give up. When they give up, that's when you dive in, right? I like it. Cool. I love it. Yeah, burritos are good. That's awesome. I think we got it, man. It's good stuff. I think we got it, man. That's awesome. Hey, I'll wrap it up there, and we'll get started on tomorrow because we'll be back tomorrow. We got the show tomorrow, the Wine and Wealth class tomorrow, so we'll do all of that. And I wish you a good rest of your day in the meantime. Hope you enjoyed, learned something, and we will see you tomorrow.